Insurance companies have historically been a very good investment. And I always like to look at insurance companies to see if they're a good investment to put into my portfolio. I'm going to take a look at Allstate. I'm a current stockholder of Allstate. I don't have a lot of shares. I've been careful with Allstate because they've had kind of a rough last 12 months. And I think they're on the road to better financial outcomes. So I wanted to take a look at their valuation that I have for the company, update it based on the information that I have for them, and then make a decision whether I want to buy more shares, just hold my shares, or sell my shares in Allstate. I'll go over my process that I use. I've been developing a process over years, and it's a process that I have for myself. I encourage you to have your process. What is it that you want to look at for a company and be consistent? That way you can evaluate companies under the same criteria and then be able to learn over the long haul when you make a good decision. Why was it a good decision? Was it profitable? Why was it profitable? On the flip side, if you lose money, go back and learn from your loss. What happened? Did the company surprise you? Did you miss some detail in their financials? Did you not understand their go forward strategy or their competition? So that's why a consistent process is a good idea. Do me a favor and like my video and subscribe to my channel if you like content like this. You could see a lot more of it. Now let's get into Allstate. Allstate provides insurance of all types for your home, for your auto. They even have health and benefits, which was a surprise to me. So they're really diversified, which is good. They spread their risk of being an insurer. Now, as mentioned, they had kind of a rough 2022, and are trying to right the ship. So management has been raising rates on policyholders, reducing expenses. Very good to see. And they're really being careful when they're going to grow in the insurance business, especially when you have these big storms. It could be really, really expensive for the company. And they certainly experienced that in 2022. So they're trying to be more careful about that. They are getting more money out of higher yields, which is good to see. One beneficiary of these high interest rates. So overall, a diversified insurance company. I like what the management is doing. I think they're on the right path. Of course, it's one thing to say it, it's more important to do it. And I'll be watching each quarterly release so that I could see if their strategy is really working. Allstate has been growing their revenues both for the quarter and for the first half. Really good growth on the top line of revenue, which is good to see. They have losses, and the losses are primarily due to the higher expense for disasters and big claims that they've had to take a big reserve on. But overall, I like that they're growing, and I do like that they're making more money off of investments. I believe that Allstate is currently discounted, and I believe the stock has 38% upside. What that means is I believe the stock is actually should be valued at $157 based on free cash flows and their earnings per share. The market will sell you shares at $114. So it leaves a potential upside of 38%, a nice attractive upside on an insurance company. Their cash flows, they've been trending really well with their free cash flows. And I took the first half and multiplied it times 2. I'm going to have a conservative growth of 3% on both short-term and long-term cash flows. Those cash flows, if you include terminal value, the net present value using a discounted rate of 10% is 43 billion. I used a higher weighted average cost of capital since they had that bad 2022. If they right the ship, that weighted average cost of capital will go down. Intrinsic value of free cash flows compared to their market cap, and it reveals a 43% discount on the stock. So that's really attractive. Earnings per share also looks good. I'm looking at the forward 4 quarters or 12 months, and I get a value of the stock of $146. The stock has been trending upward, so you can tell that investors are beginning to see that, hey, there's promising days ahead for Allstate, and there is a discount based on earnings per share. I calculate 28%. I'm going to take a blended rate. I'm going to put more value or more weight in the free cash flow method. I take 2/3 free cash flow method, 1/3 of earnings per share to get to 38% discount. I'm not able to calculate debt to EBITDA because this current 12 months, they're actually losing money. So I'm going to hold off on making that calculation, but they do have more cash than they do debt currently. So it's very good to see. And they are making a significant amount of interest revenue because they hold so much cash. Taking a look at where Allstate is traded over the last 5 years, you could see that once we hit COVID, boy, the stock really came down, and it had a nice rise coming out of COVID. Ever since then, it has had, some pretty good high points. It's really peaked at around $140 per share, but now it's just trading at $114 per share. There's a pretty good discount available on the stock. I think it could rise there, especially if they have a really good quarter. If they announce a really good Q3, you're going to see this stock really jump up. Year to date, they're down 16%, and I view it as the stock's really nicely discounted, and they have a dividend of 3.2%. So let me scorecard Allstate now. First, do I want to be part owner in this company? Do I want to be part of the industry? Yes. Do I think the company is being operated well by management? I think so. I think they have a good strategy. They're righting the ship. The balance sheet's in good shape. They have more cash than they do debt. And they offer up a nice discount, especially since they pay a dividend as well. So I'm going to be buying shares of Allstate. Hey, thanks for watching the video on Allstate. I appreciate it. Do me another favor and like my video and subscribe to my channel. That'd really help me out. Good luck investing in 2023.